In today's video, we're going to be ranking the top 5 small cap growth plays in my dividend portfolio. Our dividends of over $300,000 per year help us live the FIRE lifestyle, which means financially independent, retire early. If you need help doing the same, email me for my e-guides at akintod48@gmail.com. We're also up 27% for the year, 26.83. The reason why this has fallen from 27 is because we had our ex-dividend date today with Yield Max funds. So after today's gains of being up over 6,000 today, or 0.59%, which beat the NASDAQ as you can see above and was in line with the S&P, after today's gains, you should see our performance back up over 27% for the year. So we're beating all the indexes on a year-to-date basis and on a daily basis with Yield Max, Cornerstone, and Defiance funds. But we also want growth to get our capital gains. We want the best of both worlds. We want dividends of over $300,000 per year, and we want days gains potential like we have here. And that's why small caps were featured in this video, because small caps obviously are high growth plays. And now the Russell is starting to take off. Every video we always mention our performance, and the Russell's always lagging behind, but now it's up 8% for the year. So I'm going to share with you how I'm playing small cap names. Once again, even though we have a dividend portfolio, we want best of both worlds, growth plus dividends. So here is the number 5 pick. Coming in at number 5, we have TNA, okay? TNA. It's the triple Russell 2000 ETF. Now, whatever the Russell does, this moves up times 3. So if the Russell moves down 1%, this moves down times 3, and it decays. So be aware of the leverage and decay issue with TNA. TNA is also 75% maintenance, so that's a problem. It gives you your day's gains. If the market's up 3%, and if the Russell's up 3%, you're going to get 9% gains with TNA. But again, it's 75% maintenance, which sucks up 75% of your equity. For every $1 you put in your account, you get $4 of purchasing power. And here at this channel, I'm just using a fraction of that margin purchasing power to get ahead. Our dividends of over $300,000 per year will pay back our margin debt here of $250,000 in less than 1 year. So you want to be able to have your dividends pay back your margin debt so your leverage goes away. But in the meantime, you have to have high enough available withdrawal to withstand over 30% corrections in the market and withdraw freely from your account. This is how you live the FIRE lifestyle and live free from a 9 to 5. You have to be able to pay your bills even if the market's down. So we keep high available withdrawal because our maintenance is low in most of our names. And TNA has high maintenance. If you need help understanding maintenance, that's in my volume 3 e-guide. So TNA moves up really well with the indexes, but it's 75% maintenance, and it has some decay issues. So just be aware of that with TNA. I own some TNA, but I own a small amount. I prefer to sell puts on TNA. Yes, I own some TNA outright with the stock, but I also sell puts. Once again, like for example, here's TNA. We have a put on TNA up here. $1,300. We sold one put on TNA for again $1,300. So $50 strike price in TNA minus $13. That puts our cost basis below 40 a share, in the 30s. So we're controlling TNA with much lower risk. With this option that we sold on TNA, we're up $60 in TNA today. So you get days gains potential from TNA options, but I'm going with the premiums. I'd rather collect the $1,300, so I'm waiting till expiration just to collect this $1,300 in premiums from TNA, which lowered my margin by $1,300. If you need help selling options like I do, that's in my volume 6 e-guide. Selling options not only lowers my margin, but it lowers my risk because it lowers my cost basis. And it also gives me some performance, some days gains. We're getting guaranteed performance when we sell options, because on a $50 strike price, 10% on 50 would be $500. So we're getting $1,300. We're getting over 20% from TNA. So this is how I'm getting all my performance. When I sell options, it's an automatic 20 to 30% gain, and my risk is reduced by 20 to 30%, and my margin is reduced by the amount of the premiums received. So that's why I like TNA, but it's at number 5 because it has high maintenance. I prefer to sell options instead on TNA. I do own some TNA outright once again, but not too much because it sucks up a lot of our equity and it doesn't have a dividend. At number 4, we have Ulti, okay? It also tracks small caps. It has a lot of risky names within it. This is a fund by Yield Max. It has 102% dividend paid monthly. But if you go to the maintenance of Ulti, you'll see that it's 50%. So it's pretty high. Now for small caps, this isn't too bad, 50%. We've seen worse maintenance at E-Trade with yield max funds. So 50% isn't terrible. And again, it has 100% dividend. So you're going to cash flow your investment regardless of stock price movement. Even if this fund moves down over the course of a year, you're still going to cash flow because you get over 102% dividend. So you're going to get paid back in full by the end of the year if the dividend stays where it's at. So I like Ulti. I like the 50% maintenance for Ulti. It's just that it decays so much on its chart. If you go to its chart, Ulti right here on E-Trade, you'll see that it's moving sideways to down, and this is to be expected with 100% dividend yield. It's just that, again, you're not going to get really the gains out of Ulti. You're just going to get this exorbitant dividend, and the gains just come from TNA when I'm playing small caps. So Ulti is number 4. At number 3, we have ASG. Okay, ASG is a Liberty fund. I own USA and ASG, but ASG has an 8% dividend. As you can see, it's had a tear. It's just absolutely taken off over the last few weeks, just like the IWM has. So ASG, as you can see, it follows the chart of IWM, which is the Russell 2000. There it is, a huge breakout in the Russell 2000, and we're trying to capitalize on this breakout, okay? And again, ASG follows the IWM well. As you can see, it's participated well with the IWM over the last couple of weeks, and it has an 8% dividend. It's just that it's quarterly and not monthly, and I like my margin debt being paid down monthly, but I do own a good amount of ASG, just like I own USA. USA is the value fund, ASG is the growth fund. So I really like ASG, but what I like better is our number 2 play, OARK, OARK. I like OARK because it gives you the best of both worlds. It gives you a monthly dividend of around 40%, and it moves up some left to right on its chart. So yes, right now, as you can see, it's lagging its underlying, which is ARKK. ARKK, I sell options on ARKK as well to get extra premiums and extra growth out of OARK. If you need help selling options, once again, that's in my Volume 6 e-guide. So ARKK, it hasn't had a huge run off the lows. So there it is. There's the recent move off the lows with ARKK. So OARK, how's that tracking ARKK? And ARKK, as you could see there by the chart, was tracking the IWM somewhat well. I mean, again, it hasn't broken out like the IWM, but it's had a nice move recently, just like the IWM. And OARK has had a similar little move off the lows right here. So there's going to be some capped upside with OARK because it gives you this huge dividend. So the trade-off is you have to cap some of your upside. So that's why OARK is one of my largest plays, though, because it gives you best of both worlds. It gives you the dividend and some upside once ARKK gets going. Again, ARKK has lagged IWM a bit. So once ARKK starts taking off, you should see better performance out of OARK. But OARK is also 50% maintenance, so that's not too bad. Most of the yield max funds, again, many other yield max funds have raised their maintenance at E-Trade. So OARK 50% maintenance, not terrible. I'll take it. Again, if you need help understanding maintenance, that's in my Volume 3 e-guide. Just remember that most of my money goes towards the S&P 500 and the NASDAQ because those are the 2 largest indexes. As you can see here, Cornerstone is my largest holding. Cornerstone is a 5-star fund, and it moves upward, left to right on its chart. So you have to factor back in dividends, drips, and rights offering for Cornerstone. And as you can see here on its chart, it moves sideways on a 10-year chart, but on a 1-year chart, it has these channels where you have to time it between its rights offerings, and that's in my Volume 4 e-guide. Don't pass up Cornerstone. I don't get paid for Cornerstone, but I'm just telling you that we've been outperforming the markets all year because we've been tying our performance to the NASDAQ and the S&P. The Russell, we haven't had as much of our money in because it's been lagging all year due to the perception that rate cuts are going to be delayed as inflation persists. So I've been sticking with index-related names, the largest index plays, the NASDAQ and the S&P, and Cornerstone is my S&P play. And again, you get 20% dividends from Cornerstone every year at its NAV. It sets its dividend at 21%. It gives you 20 to 30% premiums that it averages per year. And it gives you the special drip where if you buy it around here, around let's say 774, it's dripping down at the bottom in the 6s for free money every month. And it makes you compound your yield. You actually grow your income through Cornerstone because you want to drip Cornerstone. You want to reinvest it down at the bottom for free money every month. I don't like to reinvest yield max dividends or Defiance dividends because there's no advantage there, and you're just playing with fire when you drip Defiance and yield max funds at the highs. You have to wait for a bigger dip in the markets before dripping or manually reinvesting in yield max and Defiance funds, in my opinion. But Cornerstone always gives you the advantage to reinvest at the NAV. So I have Cornerstone. I have 400 grand in Cornerstone, and It moves up or left or right on its chart. Once again, in between its rights offerings, just time that properly between the rights offerings, which again is in my volume 4 e-guide. When you buy my e-guide, you get free access to Discord for life, where we alert you of the Cornerstone rights offering announcement. Here in Discord, we have over 1,000 members pursuing the FIRE lifestyle, and we have an options channel, a yield max channel, defiance channel, you name it. We have everything here, a crypto channel, and we have a Cornerstone rights offering announcement channel, which is the most important feature here. So again, it's the best Discord chat room in the world when it comes to finance, and you get Discord free when you buy my e-guides. You also get my phone number for free when you buy my e-guides, so just keep this in mind. Okay, and then lastly, at number 1, we have IWMY. Okay, IWMY. The reason why I have IWMY as such a large position in my account is because it has a 91% dividend paid monthly, and it has 50% maintenance, but it's the entire Russell 2000 index. So OARC is not the entire Russell 2000, neither is ULTI, neither is ASG. IWMY is the entire Russell 2000 index, gives you a 91% dividend, which is bigger than OARC, and it has 50% maintenance, which isn't terrible. Okay, and also IWMY tends to fall less on down days because defiance funds have a little bit of protection built into them. When the market falls, they sell put options, so they should increase their premiums in the event of a market fall, and they also fall less on down days than their indexes. So that's why I have so much in defiance, because, well, first of all, I have 400 grand in Cornerstone, and then I have 200 grand in defiance because, again, they have really high dividends. They are the entire index, and they fall less than the indexes on down days. And this is how we stay protected when we're using margin. Okay, also IWMY is outperforming its index. As you can see here, IWMY, there it is. It's been outperforming the index. And so let's just refresh this real fast. IWMY, yes, once again, it's outperforming its index. So if you need more help doing what I'm doing, email me for my e-guides at aikentod48@gmail.com. We're outperforming all the indexes with our approach using Cornerstone, Yield Max, and Defiance. And we're also keeping small cap in our portfolio, but we have to do it right. We have to watch the maintenance. We have to collect our dividends, and we have to get best of both worlds, dividends plus capital gains. So I use a combination of these 5 funds to get ahead, and I just ranked them in this video for you, and I hope you enjoyed it as well. If you like the video, click like or subscribe, and I'll talk to you soon, everyone. Thanks.